I'm Charlotte McLeod with the Investing News Network, and here today with me is Peter Grandich of Peter Grandich and Company. Thank you so much for joining me online today. It's great to see you again.
Good to be back with you.
Great. So we have a lot to cover since the last time we spoke, which I think was toward the end of last year. I remember that during our previous conversations, you've spoken about being pretty concerned about what's going on in the general equities markets. And in some cases, that's resulted in you going, quite heavily toward cash. So I wanted to check in on what you're looking at with your portfolio right now, your cash position, and in general, how it's looking.
Sure, Charlotte. So by the end of last year, it was my desire to be completely out of general equities and bonds. And I did that, and anybody that wished to choose to follow would have done it as well. However, I did plow back, not go back, but plow back into metals, particularly gold, especially uranium, and of course, on this most recent pullback, copper. And so I put much of my cash back to work. Now in June, I felt the market had gotten way overdone on the downside, and therefore looked for what I call the short to intermediate rally, which I think we've had. And but I think call it a bear market rally, call it whatever you want. I don't think we've seen the bottoms in the general equities. I do think there is more of a choppiness likely to happen than some straight down move, especially through the end of the year. And one market that, and I didn't escape it either, that basically got annihilated was the junior resource market. I've been at this 38 years. A lot of those years, especially up until 10 years ago, it was my main livelihood. I've never seen depression and a lost will to live as I witness now in that market. Now, the good news in that, other than that, we're probably going to see for the balance of this year what I would call shotgun weddings. We're going to see some juniors merge out of necessity. We're probably going to see some majors come in and pick some off. For everything I hear, they're quite active on that shopping list already. But I do think if you can look past this and if there's still anybody that's truly a contrarian, I don't think we've ever been more oversold in a particular market, and that includes the majors, but more importantly, further down the food chain we go, this particular, compared to where the actual metal prices are. When we've had bear markets in the juniors before, it's because the metals prices collapsed and it was bleak for outlooks. I can remember, to show you how old I am, we were praying at a PDAC if gold could get back to 350. We just thought the juniors could turn around. And while inflation obviously made that price higher, the very fact is gold itself has been in a almost 3-year trading range, 1,650 to the bottom, 2,000 to the top, and is tracing out, to me, the single best technical chart I've ever witnessed with something that's commonly known as a cup and handle. And that chart has been taking place over 10 years. And if I'm correct that the breakout is to the upside eventually after the handle is completely drawn out, the longer you've gone through that motion, the more likely and higher it's going to go. So that's my optimism there. I still don't think we should be running back into general equities. Obviously, there's been some sectors that have been awfully hit hard, and probably towards the year end, they'll see tax loss selling, and if you want to start picking there. But I think we still have so many problems. And like I said last year, and I think it's been proven evident, I don't think America's been in a worse economic, social, and political situation other than before it entered the Civil War. And I don't see those things getting better anytime soon.
Okay, so there's a lot that we can unpack there. I want to start with the juniors. I'm so glad you brought up that side of the mining business because we have a lot of people who are interested in explorers. They're facing, as you said, a lot of problems right now. What do you think is the main challenge that they need to deal with at the moment? Because there's all these things going on that you've mentioned.
Well, after they do what I did, and that's wipe the blood off my face from the beating that I took in some of them, uh, the reality will set in. And first of all, I think that market has the structure of that market has dramatically changed from the days that I was in it. 10 or 20 years ago, juniors in Canada would come to the US a lot seeking investment interests. And the main way that they would find it was they would find, well, we used to be called stockbrokers, then we became financial advisors, whatever. But if you found one person who liked your stock, 200 to 500 of their clients came with that. That's gone. That is just doesn't really exist anymore in the US. They've made it impossible, even if you wanted to be a financial advisor in that regard. The compliance issues and regulatory is just too challenging. The other thing that, of course, the pandemic, which hopefully is behind us, even though some countries like Canada are still requiring that you need to be vaccinated and so forth and so on. But that pandemic lost a touch on of people to touch and feel companies. That was a main way that juniors sought exposure. And then the thing that isn't spoken about often, but I believe is true, and I believe it's one of the key ingredients why we had such a harsh decline this year. There's probably only 6 to 8 to maybe 10 funds in all of North America that invest in these juniors, that buy the placements, that buy the stocks. And because the general market got hit so hard, many of them had to sell simply because they had to sell something. And so it's quite challenging now for a plus compliance. Most juniors have just sizzle. They have a lot of hope. They don't have real reality yet, but they think this can happen and they think this can happen. And the compliance and government regulatory made it to a point where you can't speak anything that sounds like sizzle. So there's a great challenge for these companies. Now, the switch that I'm seeing, and I'm an old man in this, and I won't see the full effect of it, but I think we have to recognize is groups like yourself and others that are digital media is becoming the way for companies to go and communicate to people. People go to certain sites and they read a lot of stuff about that. And so it's a more mano a mano, excuse me, but to a lovely lady, but it's that kind of relationship that they have to have. And I think it's going to be very challenging, at least through the end of the year, that if you are in need of capital in order to continue a program or anything of the nature, you're going to pay dearly for it. Financings, if they occur, are probably going to include a full warrant, things that, when that's when things are tough. But past this year and past companies that are not in that situation, and many aren't, they were babies thrown out with the bathwater. And so I think in that area, it won't be too long in 2023 when we'll see a rebound. And of course, the certain section you're in, I think the better you're going to do. And I know I don't want to take away your questions, but my most favorite is uranium. But I also think gold fits that scenario. And I also think, believe it or not, because of the correction in copper, even though all the needs for it that everybody believed 6 or 12 months ago were around are still valid, if not more, even there, I think there's, people can have shopping lists.
Okay, thanks for going into all of that. That's a lot of great information for everybody. And we will go into all those commodities that you mentioned. And I think I want to start with gold. So we've talked before about how gold can be a safe place to put your money. And I think people are really thinking about safety right now with everything that's going on in the world, recession, inflation. However, I know that our audience is feeling a little bit frustrated about gold's performance so far in 2022. Do you think that's justified, or are people misunderstanding what gold and precious metals like silver are there for?
Well, Charlotte, I think the more frustrated person is the person that also owns mining shares. I think if you interviewed somebody that just owned gold, doesn't own any mining shares, will not be anywhere near negative on gold as they are on mining share, because for the mining share person, gold was supposed to be the savior. It was going to these numbers that a lot of us, 2,000, whatever some people put out there and all. And with that, all these shares would rise and everybody would live happily ever after. And that hasn't occurred. But if you look at gold just on itself, if you think about what's happened, like I said, it's been in a trading range. It certainly didn't get clobbered. It might have not gone up a lot, but it's not down 20, 40, 60, 70% as some of these high touted stocks from a year ago, and how much money was lost in the crypto market. Gone, not down, gone. And that was, supposed to be the new gold and all. So gold itself is probably not as bad as some people make it, but those people that make it are also the people that own the shares, and that's understandable. Okay, but I think, as you said, as a safety factor, I clearly, because of two things I think are the keys for 2023, the topics that this time next year you will have conversations with other experts and all about. One is what is happening with the BRIC nations. The BRIC nations have openly spoken now, led by Russia and China, of plans of introducing a new currency. To this day, we don't know whether it's going to be one that they already have, but most likely the Chinese, or they're going to introduce something new. But one thing we both know, they've been extreme buyers of gold, and the likelihood of having some commodity-based backing to it is almost certain, because to introduce just another fiat currency is self-defeating. I think that's going to be a big story in 2023. That's going to happen, and that's going to be bullish for gold. And then the other effect, which is just a damper for why I don't believe yet it's time to go back into financial assets, is something what I didn't call the wealth effect. See, everybody's talking about, well, the Fed is going to, only raise to a certain point, and they're going to pivot, and everybody's going to be happy ever after. The market's going to go up. But people are in far worse shape than most people imagine. There's a very small group at the top of the pyramid that has done rather well. But for most Americans, and that's all I can speak to, Charlotte, I don't follow the Canadian markets enough to talk about them directly. But here in the United States, 60 to 70% of people live in paycheck to paycheck. They don't have $1,000 saved for emergencies. And they are literally witnessing every necessity, not luxury, necessity, going up double digit or more, from heating or air conditioning in their home to putting fuel in their car to food, let alone, a housing bubble that's bursting at the seams as we speak. So the wealth effect of this and how people are going to feel, the majority of them, I don't think is being taken into account. And eventually, despite what a lot of these younger folks who have not been around the block feel, eventually stocks resort back to what they really are, and they're part ownerships of businesses. And businesses primarily depend on how well an economy is doing, whether or not they do well. And if the wealth effect is going to be hard hit and people are going to feel less wealthier, then it's very hard to demonstrate that the economy is going to boom, especially when you have political division unlike anything, I think, other than the Civil War. I deal a lot with, Charlotte, small to mid-sized business owners throughout the United States. And I think almost every single one would say that they haven't seen really good legislation that helps the small business owner in the last 20 years. And they've been the backbone of the economy in the US. It's far more challenging and far more difficult, even before the pandemic. And so all those things are not being played in, the geopoliticals, the BRIC story. The average financial advisor in the US who's only been in the business since the last financial crisis, they're not taking this into the equation. And I think those are the surprises and unfortunately shocks that are still to come in the general equity markets.
Yeah, and this is quite alarming. When you talk about everyday people living paycheck to paycheck, inflation is coming in. What do you see coming for these people who, like, that sounds very alarming to me.
Well, they're going to do what I understand is they're going to look for the government to do more and more. As we speak, they just announced, that they're going to reduce some student loan debt. I have very great difficulty with that. Now, I'll tell you why. I think it's setting up a bad precedent. First of all, those people, did they get unfair loans? No, they got the same type of loans of the other people that paid it back. Did they get their education if they wanted it, that they borrowed their money for? Yes, they did. And simply because some state, well, they're overburdened now to defeat it. What about all the people that worked to pay it back and borrowed to pay it back? And here's the other part that no one's talking about. Maybe some are, but not only now do those people not pay that back, but that was money the government was depending on as a form of tax to take income. So they're going to have to get that income from somewhere. So they're going to tax me twice. I'm going to pay twice for this. I paid for my kids' college education. I'm not getting a break because I did. And now I have to pay even more taxes because someone who borrowed like my kid did, but didn't pay it back, gets a break and she doesn't. And that's going to set up a precedent, because what happens if we do go into a deep recession and all people start saying, well, I can't pay my consumer credit cards. You know, where do you stop? You know, and how long do you keep taking from the people that still have it before they go, enough is enough? I want to get in the wagon too. I'm tired of pulling. And those are the things that I think that are still to come and play out here. And I don't think the United States is going to be alone in that.
Right. So there's a lot going on. Thanks for going over those things with us. I want to also make sure to touch on uranium with you, because you mentioned it's one of your favorites. I know it's a favorite for many people who are watching right now as well. And of course, since the last time we spoke, we've had the Russia-Ukraine war breakout. And I think that has really put the spotlight on energy security just globally. So I want to kind of take your temperature on the extent that you think this conflict is increasing acceptance of uranium and, nuclear power.
Well, there's no such thing as a sure thing. So I don't want anybody to say, well, just because we saw this guy and he said it, it has to be. But the closest I've ever seen in all the years I've been doing this, which is 38, is the uranium market right now. And to think about saying that just 5 years ago, they would have sent guys in white suits to take me away. I mean, there was such dislike towards uranium. There were known politicians in the US and other places, Germany especially. We are never going to see another nuclear plant built again. In fact, we want to tear them all down. Try saying that now as a politician when the people can't even get power for air conditioning or heating or whatever the case may be. The outlook for uranium in terms of nuclear energy and being part of the necessity for energy has flipped 180 and gaining momentum as each day passes. Where you get that supply is really a big concern. It should be, think about this, in the United States, they say about 50 million pounds of uranium is used each year to run our current nuclear plants. I'm told that we produce about zero on our own. Okay. Now we have, and once two greatest trading partners, great friends to the north that can produce uranium. And Australia has some, potential, but some of the main areas where we're looking are not exactly friends of ours and may have become even less friends of ours since you and I last spoke. So, and uranium is not alone in that. There are a lot of other minerals that fit that criteria. The thing that's changed, and I got to emphasize this, and it's really important for all metals. 20, 30 years ago, when I was managed hedge funds and mutual funds for metals and things of that nature, you could take a globe, close your eyes, spin it, hit a country and go, oh yeah, we can go there. Not anymore. The mineral world has shrunk dramatically. In recent weeks, we've had the CEO of Barrick Gold openly talking about great concerns about being in Chile, and they may nationalize the mines and all this. And it's not just there. So not only is the need for nuclear power a necessity and going to grow, where we're going to get the uranium from, but the political, environmental, and all the other things that come along with that. And so it's hard pressed to see how over time. Now, here's the one negative. Here's the difference in the last 20 years. there are, if you went on the internet now and typed in uranium, there's all sorts of discussion areas where people are discussing it, and they discuss it all day. And some people make 20 or 30 posts a day about it. The negative of that is if you keep reading that every day and intraday, within 2 or 3 weeks, you say to yourself, why isn't this higher? I mean, everything I'm reading here is great. And it kind of comes almost a self-fulfilling prophecy of disappointment. I think people become too short-sighted on it and they watch it too closely. And the biggest thing about it is you can count on one hand the public companies that you could buy that produce it. Now, to me, Cameco is like Apple to the technology industry. If you're going to love the uranium, Cameco is absolutely first. But once you slip past Cameco or one or two other key majors, there's not a lot of other players, where in other metals, there's hundreds, if not thousands of people playing that and all. So that's the other uniqueness in it. And of course, what Sprott did and bringing out a vehicle to where you can actually have exposure to the physical price is also bullish. So I remain staunchly bullish. I also own and been an investor since the very first seed financing in a U.S. company, and I think those type of plays are going to become more interesting, especially when you look at when you look at a company like this, Kraken Energy, where 3 or 4 of the main principles of a previous uranium company that went from millions to worth billions left and are running that company. So I think we're getting set up for good movements in uranium, but patience is a virtue. And remember, up until now, the negativity in the stock market has been a dampen, but eventually they're going to separate. People are going to realize how critical uranium becomes through this next winter when all the stories are out and how people are cold and all this stuff. And no matter what the general market is doing, I think the uranium stocks are going to be able to separate themselves.
Yeah, I know a lot of people are certainly hoping to see that. And you're mentioning your approach to the companies in the sector. I know we've spoken before about Cameco, and that's the starting point that you see for people. I wanted to check up with you on that because recently we've seen some M&A activity in the sector. People, with UEC and Denison going for UEX. So I wondered if that's changed your approach at all. Do you think people should be looking more at potential takeover targets, or does that not really make sense since the sector is so small?
I think the sector is, especially compared to all other sectors. That doesn't mean that we can't still see those type of situations, but there's just too few of them to make it to where it's going to be so many of them. I do think we haven't seen the general public or the general investment community pay attention to uranium. Now, what it has going for it, which gold doesn't, gold's always going to be like kryptonite to those people. They're never going to be bullish on it because it goes against financial assets. But uranium is being put into the energy sector. And after all the excitement of oil and natural gas kind of dies down and so forth and so on, I think that's going to be another opportunity for uranium to get its day in the sun, so to speak. And so it's very, the only two things, honestly, that is another unfortunate incident that causes people to step away, or the world really implodes and there's such dire depressions all around. Other than that, it's very hard to see how the uranium price doesn't work higher, and those who really produce it or have significant projects that can eventually produce it, they have to go up. That's just how I look at it.
It makes total sense. I did want to ask you about oil and gas as well, because we've been talking about energy and energy security and places that need it and how uranium is part of that. Would you see any opportunity in oil and gas as well while we're facing these types of concerns?
I think so much has been made in it, and I'm certain there's still some opportunities there, but it's pretty well, it's in an advanced stage. Doesn't mean it's going to go down a lot, but it's very hard to find things that would be considered undervalued, so to speak. You have to be more of a momentum player. And I tend to be a great contrarian type if they're still existing. And yes, people say, boy, Pete, you were early. The only thing I remember, I was taught by a wonderful guy who passed away years ago, who was one of the smartest people I knew in the business. And he had a famous saying, I'd rather be a year too early than a day too late in the market. And I think it's a day too late to make that a big part of one's portfolio. But doesn't mean it's not going to still do well. I just don't think we're going to find across the board undervaluedness in that sector.
Okay, that makes a lot of sense as well. So let's touch on copper too. We've spoken about the opportunity in copper. I know you're still seeing that. However, we've been talking about what's going on globally. We have recession concerns, not just in individual companies, but also around the world. And one thing that we hear often about copper is it's kind of a bellwether for the economy. So should we be worried about the effects of what's going on economically on copper in terms of demand?
In normal previous times, it would be wrong to be a buyer of copper now, because you're right. The world is going to go into a more tougher economic struggle. It's going to get tougher before it can even get better. The big economic engine that saved us in the last financial crisis has its own problems now, and that's China. People do not realize that if it wasn't for China's strength and liquidity, the 2008 financial crisis would have been a lot worse. We may not even recovered by now. But they are not somebody to be counted on for getting the political aspects of it. It's just the economics. And normally you would say, oh, why would you want to own copper? It could only go down. The difference this time is we have such a limited supplies at the moment. We've had no real money put into looking for new copper until recently. For 2 years, we didn't even have a new copper mine open. And we have a world that's clearly moving, whether you like it or not, whatever camp you're in or not, it's moving towards, and all government policies is favoring a lot more usage of electricity because of electrical vehicles and all the other things. And the ability to deliver that electricity, because all these grid systems are old. I like to joke here in the US, Thomas Edison built some of them. That's how old they are. But the bottom line is, we're going to need a lot more copper. And copper's availability, like the scarcity that we spoke about potentially of uranium ore, where it's located, where you can get it, is profound. And this actual delay is actually setting up that future that everybody thought was so bright for copper just 6 or 12 months ago, even better, even though it pulled back here a lot. I personally got extremely involved in a company called Arizona Metals, but copper has such extreme need going forward and a very, very limited ability to deliver more copper anytime soon. And even if a whole bunch of money, which mining companies have, their capex has been just going down and down, even though their free cash flow has been going up and up. And it's not just something you find, take it out of the ground and put it to work all in 6 to 12 months. It takes years, several years. So I think because it's pulled back to where it did, it is part of that wanting to own things like gold and uranium and copper as a portfolio. And so it may not be my most favorite one because like I just told you, I think it's very hard for uranium not to go up, but it's probably as attractive as gold, even though there's a couple of different reasons for it. But I think it has an extremely amount of bullish fundamentals here. And a lot of those companies were babies thrown out with the bathwater. And like the next few months, let me, maybe if there's no more questions, if there are, I'll be glad to ask them. I think the junior market is basically an L for the rest of the year. So if you think about an L, we went down. At best, we're going to go sideways. Anything that you're looking for or doing, even with copper, has to be with an outlook for 2023 and longer. And let me say this, especially to younger people. When I entered the business, every research report was basically had a 3 to 5 year outlook. If you talk to people now about, hey, I think this thing could be really good over the next 3 to 5 years, it could double. And they go, double in 3 to 5 years. I expect things to double in a week or a month or maybe 6 months, but I'm not going to wait 3 to 5 years. Get used to that because the biggest financial bubble in history. And historians, I'll be long gone, but historians look back, this will turn out to have been the biggest financial bubble in history. It's over. It's busted. We're not going to be able to continue to do the things that drove us. The monetary heroin that everybody from the Don't Worry, Be Happy crowd is hoping that somehow Powell is going to bring back and put in the gas tank and grab the Kool-Aid and drive down that easy street making money, that's gone. And so things are going to be much more challenging and so forth and so on. And so I just think now you need to start to look out and be willing to make less than what's been the average and take longer for that to happen.
I think you're so right. We need to really let go of that instant gratification that people seem to want when they're in the markets. That really wraps up all of my questions. But if you did have anything else that's on your mind right now that you think investors should know about, let me know.
Well, I just think, I've lost enough money to write many books about it. And I think some of the things that people have to recognize is some of the things that are getting in the way of some people's thinking now, especially in the professional community, are things like hubris and pride. The ultimate crime in investing is never being wrong. You have to say, I was wrong, just like Fonzie had to learn 40 years ago to say, I was wrong. And I've been wrong. And the ultimate crime in investing is not being wrong, it's staying wrong. I think you have to recognize that the fundamental changes that just occurred in these last couple of years, and so few financial advisors that at least I hear and know of, even at the firm where I still I have my planning group, many of those people that work for that same person where I work, they don't understand a thing about geopolitics. They don't understand how that is going to impact their stock market here in the US. And that is going to be the big story. Politics, both here and abroad, and how they're going to impact economies and social ways of living are just going to be more and more of the story. And you're going to have to get a grasp and understand it. And that's not something that gets done in a day or a week. So I think if you're going to be anything, be a live chicken versus a dead duck. That's what I think we need, the kind of approach we need to take.
Okay, well, thank you so much. I think that's a good note to end on. You took us on a whirlwind tour through what's going on in the markets, and I think there's really a lot of valuable information for everybody here.
Well, thank you for giving me the opportunity. God bless.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Peter Grandich.